Some question where and how to use strategic beta exchange-traded funds. There are three primary roles they can play in portfolios: a core allocation, a satellite position, or a risk management tool. A core allocation is a portfolio centerpiece. It's intended to anchor the portfolio according to an investor's long-term strategic goals. The core is typically composed of well-diversified assets, with cost and liquidity in mind. That's why traditional capitalization-weighted ETFs have been popular. One way to preserve critical core attributes while also introducing the potential for better diversification, reduced risk, and enhanced return is to consider complementing or replacing existing core assets with strategic beta multi-factor ETFs. Certain multi-factor ETFs may offer investors better risk and return outcomes than traditional passive ETFs and active managers that mirror a benchmark. That can be especially important within a client's core because it tends to be the biggest component of a portfolio. Surrounding the core are satellite positions. These investments are used to help achieve specific objectives, like seeking additional outperformance or targeting a specific area of the stock market. If an investor has strong conviction that emerging markets represents an opportunity for growth, they may consider an emerging markets multi-factor ETF that may improve exposure to potentially faster-growing emerging market countries. Or if an investor is concerned with impending stock market instability or would like to lower overall portfolio risk, they may consider adding a satellite position of a strategic beta ETF designed to provide lower volatility than the overall market. This may help limit the downside in down markets. Strategic beta ETFs can also help manage certain risks within a portfolio. If an investor currently owns an ETF or actively managed fund that may be susceptible to unintentional risk exposures, they may want to consider pairing it with a more diversified multi-factor ETF that could potentially mitigate some of the risks that may come from unintended exposures in those strategies. Once we understand the wheres and hows of strategic beta ETFs, it becomes a lot easier to see the role they could have in an investor's portfolio. Learn more at hartfordfunds.com/ETF whiteboard.
Investing involves risk, including the possible loss of principal. Investors should carefully consider a fund's investment objectives, risks, charges, and expenses. This and other important information is contained in the fund's prospectus and summary prospectus, which can be obtained by visiting hartfordfunds.com. Please read it carefully before investing.